What's up guys, welcome back to this brand new video. Today I want to do kind of a tutorial on the tool that I would say helped me the most in trading, and that is the one-page trading plan. When I first heard about the term trading plan, the only thing I thought about was a big plan, like a business plan with thousands of pages that you have to go through, and it's hard to create and stuff. And actually the very first trading plan I created had about 30 pages. It's something I did over 30 days, and that was a real mess. What you need to understand is that if you want to have a trading plan that's going to be effective, it has to be short, it has to be simple, and you had to have it on your desk at all times. So I want to guide you through how to fill it today. You can download it on my blog, it's totally free, and if you haven't done so yet, just go download it and get it. And let's get started right away with the tutorial. So this right here is what the trading plan looks like, and I want to get you through every single step of the way. There's a couple of parts to fill in a trading plan, and all of them are essential. Now, it might feel a little bit tough at the beginning, but understand that when you have this in place, you will be able to follow your trading plan much easier, and you will have it in front of you at all times, which is going to make it easier for you to stick to it. I really recommend you print this sheet first, and you fill it either with a pen, or you can fill it on your computer before, and then you print it, put it on your desk, totally up to you. But having this paper copy is really essential. Now, the very first section is about overview and goal of your trading. This is really crucial because you need to have sort of a vision or sort of a plan for what you want to accomplish in trading. It's good to trade for money, it's one thing, but you need really to have this why. And the why is what's going to keep you moving forward whenever you have a bad time in trading. This is your basic reason why you should stick to trading and why you need to keep going and trust the process over time. So fill this out. This could be very broad, it's going to depend on different people. I personally have my reason to trade. For me, it's travel, freedom, family, and all these things. But you write down whatever motivation, whatever values you have at the top right here. And this is going to be helpful when you review every single day. Then time frame used. This can be one time frame if you trade only one time frame, or multiple, up to you, okay, depending on your strategy and your style. I personally have different time frame because I will look at multiple charts, not only the daily chart, for example. I'll look at the daily chart, the forward chart, and the 1 hour chart. This is when I'm at home. When I travel, it's going to be a different plan. So I might fill a few of these sheets, not only one. So when I travel, it's going to be the daily chart and the forward chart, okay, the time frame I used. Then trading times. When are you going to trade? Okay. If you are going to day trade, you might want to pick one session. Let's say you're going to trade the New York session from whatever 9 or 8 a.m. to 12 p.m. Okay, that could be possible. Or you're going to trade the Asian session, so at night. Let's say that's going to be from 7 p.m. Eastern time to, let's say, 10 p.m. Eastern time. So you write this down here. You write, and you're better starting off with one that you write here and just going with that. Okay, if you pick too many things, it's going to be tough to execute. And ideally, you want to have this one trading plan for one strategy. Two strategies you trade, two trading plan. They're going to be different. I personally look at the chart multiple times a day when I'm at home. So I'll look at every hour. I'll just write every hour. Okay, every hour when the candle close, I'll just look back at the chart a little bit. I do have this review I'm doing every morning. So I'll write from, let's say, 8 to 8:30 a.m. I'm doing the review. Okay, that's my trading time every morning. And then instrument traded. Okay, the next part. What pairs are you going to trade? If you trade stocks, you might have some stocks you prefer to trade, although there's going to be many. But if you trade Forex, there's not that many pairs. So figure out which one you're going to trade and which one at least you're going to follow. Okay, you could follow 5, you could follow 1, you could follow 10. It depends. I personally follow a lot and I take less trades, but depending on your style, you might follow fewer. It's possible. So write down all the pairs you follow here. And those, before you change them, you have to verify that you can change them, that you have a reason to change them. If you have a lot of losing trade on a pair, you can remove it. Then we get into the trading strategy right here in this section. Okay, we want to know what is your setup, what is your entry, and what is your exit. Those are the three parts to any strategy. So setup, what we're talking about here is what you look for in the market whenever you want to trade. Okay, what is the thing that you want to see on the chart? And that you have to start like at the top and go down over time. So you would tell, let's say I look at the market phase, I look at how price is behaving, and I look for, let's say, a range. That's my personal style. At the range, when we get to the support or resistance areas of that range, I'll be looking to trade with the Bollinger Band. I want to see a break of the Bollinger Band above or below, and that's what my setup is. Then the entry. Okay, how do I decide to enter? And that's going to be, for me, I want to see that we break above the high or the low of the candlestick. Okay, it's pretty simple. As soon as we break the high for a long trade, I'll enter. Okay, I'll put an entry order actually. So that's what I would write. Entry order above the high or below the low for a sell trade. Then the exit. Okay, crucial part also. How do you take profit? Where's your stop loss? I would put for myself stop loss below the low of the candlestick for a long trade, or above the high for a sell trade. And I'll put take profit. Well, you could take profit at a zone, or you could take profit just with a fixed take profit. Okay, I don't recommend having a take profit at like 50 pip or 100 pip. That's not really the point. The point is you want to have multiples of reward. So at 2-to-1 reward to risk, or at 1-to-1 of reward to risk, based on what you've tested. Okay, that's going to be based on backtesting. Now, if you have multiple take profit, that's fine. Just write them here. I would write one take profit here, the next take profit there, okay? Because I have two take profit myself. And then here is where we get to the very interesting part. Okay, this is what most traders will kind of forget to include, but is absolutely essential, okay? Risk percentage per trade. And I want to bring out some backtesting results because this is where it's going to get really interesting, and we need those backtesting results to compute that. So here are the results of a backtesting I did. This is a strategy for the 1-hour chart on Euro-USD based on moving average. Been backtesting this, and here are the results I get. The equity curve looks pretty good to me. Now this is not 100 trades like I usually recommend that you get for your backtesting, but we'll use it for this example. What I'm going to do is I'm going to take the data that we get in this backtesting. Okay, this is the type of stuff we get. And actually let me open up right here. So we're going to use what we see on this to compute the risk that we can have per trade. And this is very crucial. If you miss this step, you're probably going to blow up your account because you don't know how much you can risk per trade and you have no clue as to what your probability of blowing up your account is. So we need to be very careful here. I'm going to look at two different things. The first one is my win rate. So we've got win rate here is 52%, 52.17. The other thing I'll look at is my average winning trade. Okay, this is kind of the reward to risk that I have per trade. So on an average profit trade, I'm gonna win 238.15. Okay, this is on whatever account size this is, I think $10,000. And I'm gonna lose on average $151.78 per trade that I lose. Okay, so I need to compute my reward to risk. Bring up this nice little calculator here, and I'll compute that by just dividing this one here by the other one. So we get 1.50, let's say 1.6 average reward to risk per trade. Okay, this is less than what people say you need to have 2 reward to risk. Okay, this is less, but we don't care. This is profitable, it works. So I'm going to use this data to compute what we call the risk of June. And this is where you're going to go on, I'll put the link below. I use the calculator from another educator, Chris Capri, and I'm going to enter the data here that we have. Average payoff ratio, this is what we get here, 1.56 or 1.6, okay. Actually, we're better just running it up, down. Accuracy, this is our win rate. So let's bring this back. We had a win rate of 52.71%. That's all right. Now, percentage of equity, this is what you're going to risk per trade, okay? You have to go with trial and error here. Let's say I'm going to do 5% per trade. I'll calculate the risk of ruin. Okay, we have a risk of ruin bigger than 0. So we don't want to trade that because the risk of blowing up an account is too large. Now, let's say I'm going to go at 3%. We still do not have 0, so we need to go even lower. Let's say I'm going to go at 2% per trade. Now we get 0. So I could go all the way, and we can try this a little bit more, but I could go all the way to risk 2.7% per trade, and I would be okay. I would not blow up an account based on these stats. Now, of course, you need to go back, reevaluate if those stats are always okay, always the same, or if they vary a lot. So what I'm going to do is I'm going to go back on the trading plan, and I would enter here the risk I want to put per trade, knowing that I cannot go beyond 2.7%. Okay, this is the maximum. If I go above that, I risk blowing up my account, and I really don't want to have that. This is the worst thing that can happen. So be very careful with that. Now, minimum reward to risk. On this strategy, we don't really care about any minimum reward to risk. We just go with whatever happens, and you always want to trade like you backtest. So if you backtest something that gives you some reward to risk, use the same thing. Okay, don't add more rules here just for fun. But if you were to trade something very discretionary, where you put your take profit at a zone, for example, you might want to consider not taking the trade when the reward to risk is not sufficient. Okay, if you are having a win rate of, let's say, 40%, you cannot take the trades where you only have 1-to-1 of reward to risk. Okay, because otherwise you're going to lose money all the time. So that's where you would put a rule for that. Now, maximum drawdown. What is the maximum drawdown you can have on your account to not feel too bad and to just keep trading the same way you did? Okay, if you exceed that number, you need to stop trading and reevaluate because something is going wrong. Now, to do this, we need to understand how it works a little bit. Okay, so we need to go back on the data. Try to see what is the maximum drawdown here that we could have. And we do this by looking at this number right here, which is the maximal drawdown. Now, this only tells us the dollar amount, and I do not know exactly how big this is in pip, but what I do know is that the consecutive losses are 6 right here. So we can have a maximum of 6 losses in a row with this trading strategy. This is based on the past, of course, but we need to at least tolerate that. Can we sustain a loss of 6 times 2.7%, which is 16.2%? Are we okay with that? And if not, we need to reduce our risk. But the maximum drawdown that we want to put in the trading plan is only to give us an idea of when we're going to stop maybe trading for a while and evaluate how things are going, whether we need to tweak things a little bit. Okay, and I would say if you're starting out, you might want to reduce your risk here per trade to, let's say, 1% and go with a drawdown of, let's say, 10% and go with a drawdown of 10%. When you reach that, stop trading a little bit and reevaluate. See how you perform, see what mistakes you've made, see whether it's only the market doing things differently, and if you need to tweak anything for the future. That is very crucial. Now, the next and last part is going to be to write a small implementation plan. How are you going to implement this strategy? Are you going to trade demo for a few months or a number of trades? Let's say trading demo for 40 trades and see the result. Are you going to trade live right away but reevaluate? Are you going to use reward and punishment? Are you going to go incrementally? Those are all things you have to think about. I'm at the point myself where I know my strategy, so I don't really have to have this implementation plan. But I still add money to my account consistently because I want to grow my account. You write whatever works in your case and you stick to it. Okay, that's going to be very important. And that's why the last part is signature and date. You want to date this, you want to know when this has been created and when you need to go back and evaluate it. If you have a trading plan that's been going on for 6 months and you didn't look back at your result and at your trades, there's something to do now. There's something you have to do right now. You need to go back and reevaluate. And if you change every 3 months, strategies or whatever, then there's a problem too. And if you have thousands of these plans on your desk, there's also something wrong. This is meant to be something that you stick to and that you use as a tool for your trading. So I hope this has been valuable for you guys. I hope you liked this quick tutorial, and I sincerely hope you will use the trading plan. It's totally free. Again, I'll put the link below if you want to check it out. And if you have any question about how it works or what else, just watch this video again. I think everything's going to be really well explained, but you can reach out, comment with your question below. I'll do my best to help you out. And I'll see you guys pretty soon for the next video. Ciao.